Hi, everyone. This is Chris Kimble, founder of Kimble Charting Solutions, and welcome to another edition of your Daily 5. Today is June 29th, and let me be the first to, or not the first, but just to mention, I hope everyone has a happy 4th of July and safe, weekend. As we all seen in the news that the northwest part of America is in a heat wave. And so today, in honor of that, I thought we'd talk about a few things that are hot. Lumber has been really hot, but ironically, it's actually cooled off. It's down about 50% in the last couple of months. Does that mean anything? Red hot commodities, are they going to break out, or are they peaking after a strong one-year performance? Copper has been hot as well. It's testing 11-year highs. Interest rates are hot. They're up 115% in the past year. Are they heading higher, or are they peaking? And even though valuations are high, what's the key message coming from the advanced decline line? So if any of you are doing a home project dealing with Menards or Lowe's or Home Depot, and you had to consume some wood, you know that lumber prices are up quite a bit. This looks at lumber prices going back over the last 40 years. And it's on a monthly basis. And if you'll notice up here in the upper right, I applied Fibonacci to the 1984 lows and the 2017 highs. And so this near vertical spike in lumber from around 350 up to 1700 hit two potential resistance points, which was the Fib 261 level and this rising resistance line that's 40 years old. And you can see on this monthly chart a heck of a reversal here, as momentum was essentially as high or the highest that it's been in 4 decades. And then you see a large bearish reversal here, and now it's actually broken this support line. And so again, lumber hit almost 1700, and now it's trading, you can see here on the right side of the screen, at around 800. So that's nearly a 50% haircut. And I think the thing that intrigues me is it's not quite there. It'd still have to decline a decent percentage more. But the high in 2017, around 650, now becomes a potential support point. But I know anybody that's wanting to do a project or build a home, I don't know how fast this decline in lumber is going to hit the retail. It always seems to go up faster than it goes down. But this could be an interesting asset to watch, regardless if you are building or not, for just commodities and overall inflation. And speaking of commodities inflation, this is a chart from StockCharts on the Reuters Jefferies CRB Index. And I think a couple of things stick out to me. You see these red parallel lines that commodities peaked in essentially 08 and then a lower high in 11, and they stayed in this pretty well-defined falling channel. And so this is the 39-week, or essentially a 1-year performance here at the bottom. And you can see right here that commodities are still up just short of 50% in the last 1 year. And this sharp rally has them testing the top of a bearish channel. And you can see this level, which is essentially in the 210 range, was support in the financial crisis, was support here again in 2015 until commodities lost another 50%. It was near resistance in 2017. And so now we're testing dual resistance, here. And so, is lumber going to be the first tip that commodities, are peaking? Obviously, this is going to, the bond market has been troublesome in a way for the bond market, because as all of you know, rising commodity prices are worrisome for the bond bulls. And so interest rates have risen dramatically. And so this is a big test for commodities. I think the one thing that the takeaway to look at here, there's been 2 other times, essentially in the last 20 years, that commodities have rallied 40% or more in the past year. One of those was in 2008 and the other was in 2011, and they both represented very significant peaks in commodity prices. So whether we want to label it COVID pressure or what, but the pricing pressure performance is under a very unique and rare bearish channel test, currently. Speaking of another important commodity, copper. Copper peaked in 2011, as well as we just saw on the commodities chart. Copper has had a strong rally itself. You can see a double bottom here around $2, and now we traded almost up to 5. So you can see that's well in advance of more than 100% rally. It's a couple 100%, but this rally that's contained inside this green, very sharp rising channel that's almost a 90-degree ascent, met the 2011 highs and this support resistance line that's almost 20 years old, and we see a reversal and now a break of support. And so that's a big key for another, as they say, as copper goes, so goes the world economies. And so the prior chart on commodities and this copper chart could have a lot to do with interest rates. And speaking of interest rates, you can see this chart on the 10-year yield is up 115% over the last year, and you can see it was up almost 200% in the last 1 year. This is a 50-year chart that you can see how rare of a or how much of an outlier of a gain that is. And so this rally in interest rates has TNX, a 10-year yield, or excuse me, the 10-year yield is testing what was support as resistance. And so we see a heck of a confluence of long-term resistance channels from lumber to the commodities index to copper and to interest rates. And so if we would flip that around, as interest rates have risen dramatically, this is a look at TLT weekly. You can see that TLT in the COVID crisis hit 180, and now we're at 143 and change. But the 135 level was essentially resistance in 2016, was double support in 2019. We tested it recently, and obviously, or not obviously, but I think it's kind of a sleepy price action that TLT potentially may have double bottomed and is making potentially a series of lower highs and higher highs in a short time period as momentum is trying to make higher lows. And so it goes back to me, the chicken or the egg. Who's going to be the tip off? Is it going to be commodities turn weak or interest rates break out? But I think we're really facing a very much a confirmation piece that I wanted everybody to be aware of, this macro perspective to the overall economy. And one of my favorite phrases, it doesn't matter until it matters, but something that I think in time is going to matter dramatically, and that's valuations. This is the Buffett indicator, which is taking essentially the value of corporate equities divided by GDP. And humbly, I thought when the high was hit in the year 2000, the 1999 .com bubble at 159, I humbly wondered if we'd ever see that value again. Well, we've seen it again. We've seen it exceeded by almost another 25-30%. And so I think this has bothered people, understandably. It's something that I think we should not ignore, but it's probably giving you a clue. You ought to know where the exit door is, but you don't need to be entering the exit or going out the exit door until we see some deterioration. And so, as I've said here before, if we were on a desert island and I could only have one chart, I'd have this chart from StockCharts, which is an NYSE advanced decline line that only looks at common stocks only. And you can see this blue support line since essentially in 2010. So we're 11 years old of higher highs and higher lows. And so this is obviously a strong support line. And so I don't think that valuation chart is going to matter until support breaks at 1, and it has not broken. I always like to look also at the daily view, that kind of zooming in a little bit closer, that its trend is still up. And so I think the valuations are going to matter if we would see this break, but right now it's not. The advanced decline line is not sending a message to be highly concerned about. So lumber's fallen a lot. Commodities are testing resistance. Copper's testing resistance. So is interest rates, and valuations are at a key level as well. So again, I hope all of you have a happy 4th of July. Again, we're offering a 40% discount on our research services, to StockCharts members, and you can get that by going to kimblechartingsolutions.com/StockCharts. And hopefully you can have just a wonderful 4th of July. Then maybe Independence Day means something even new for us this year after the COVID situation. So take care, everyone. Thank you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.